as Jay mentioned, so my name is Peeyush Varshney. I'm the president and CEO of Canada Zinc Metals Corp. And maybe just at the outset, I want to just make clear, there's another company called Canadian Zinc Corporation. That's not us. We're Canada Zinc Metals, CZX. And as Jay mentioned, we just recently started talking about the project, and just this week, Jay made the recommendation to subscribers, and there are copies of his report out on our table outside, so I welcome you to come by and grab a copy of it. It's a pretty good summary of the opportunity. So Canada Zinc Metals, we're based in British Columbia. All our projects are in BC, and we have two sort of main value drivers. One is the Akai property, which hosts the Cardiac Creek deposit. It's roughly 30 million tons of about 10% zinc lead, 8.5% zinc, 1.5 lead with some silver. So very big scale size deposit there and very good grade. And then there's the Kachika Regional Project, which is this district scale land holding that's in the area. So there's the map of the assets. So the yellow project is the Akai property that I speak of. So that main deposit remains open for expansion along strike and at depth. So although we're already at around 30 million tons, we think we can be even bigger. And 71% of that resource is in the indicated category, so it's a higher confidence level. Then we own all of the pink and all of the red as well. So it really is a 140-kilometer stretch of very prospective claims. It's almost 80,000 hectares, so it truly is district scale. And that is one of the things that's attracting interest from a number of major mining groups right now is, we've got the scale in terms of size of deposit, we've got very good grade, we've got this district scale potential for further exploration, as well as the infrastructure in the area, which we'll get into as well. And the deposit itself is a CZX deposit. So these sedimentary exhalative deposits, they make up most of the largest zinc systems in the world. So this is also a big CZX system here. And they're often found like peas in a pod or pearls in a necklace. So we're confident that there's other deposits to be discovered along that trend. So CZX, we've got roughly 167 million shares out. There's the stock trading pattern, currently trading at about 30 cents, and about $6 million in the treasury currently. In terms of key shareholders, you can see that we are attracting investment from big mining groups. Tongling Non-Ferrous Metals is a state-owned enterprise out of China. They're primarily a copper play. They've got copper exploration projects, copper mines, and copper smelters. They've also got a zinc and lead smelter. And we're the only company that they've invested in that's in the zinc space outside of China. They're the same company that bought out Corriente Resources about 5 or 6 years ago. It was a venture-listed company. They paid $680 million to buy out Corriente for some undeveloped copper deposits in Ecuador. So Tongling's our biggest shareholder. Jinto's a Chinese investment group. They saw Tongling invest. They saw Tongling buy out Corriente, so Jinto also wanted to become a shareholder. They own about 6%. And then more recently, Teck and Korea Zinc have become shareholders as well. If you include management, family members, people close to management, about 46% of the shares are held by those small groups. So although there's 167 million shares out, about 75 million shares of that does not trade. Just going back to this map, so the blue properties here are owned by Teck and Korea Zinc. So our neighbors happen to be big mining groups. The Cirque deposit is only 20 kilometers from our Akai property. So you've got these two major deposits within 20 kilometers of each other. And then Teck owns the two lower blue projects as well. The pink sections here are worth mentioning. The Pi property, the Cirque East, and the Ewan property. They're part of the Kachika Regional package. So it's earlier stage, very prospective claims. But in fact, Teck and Korea Zinc have optioned them from us. So we do have two major mining groups actually spending money on our earlier stage claims, those three claims. But we own everything else in red as well. Management and directors. So I'm a corporate lawyer by training, involved in Mountain Province Diamonds. Our family has actually been involved in that one from the very first drill hole, the discovery hole, into kimberlite. I remain a director of that, and just last year, along with our partner De Beers, we actually constructed the mine. It was $1.2 billion. Our family flew up to the mine opening, but that's something that we've been involved in from the very first drill hole. And obviously, we're trying to maximize shareholder value, so we stay with these projects until we get to that level. John Thomas on our board, he's a metallurgist. Marco Strube, a portfolio manager out of Zurich, he's on our board. Ken McDonald is our VP Exploration. And so Ken, he lives in Prince George, which is closer to our project. Very strong technically, but another skill set that Ken brings to the table is he used to work for the Ministry of Mines and Energy for the BC government. So he knows the permitting side of things extremely well. And like all projects, permitting is key to moving them forward. So as a consultant for the Mount Milligan project owned by Terrain Metals some years ago, Ken led the permitting team to get it fully permitted, shovel ready, and then Thompson Creek Metals came in and bought Terrain Metals for about $650 million. So Ken has that skill set to take this, to get it shovel ready, fully permitted. Infrastructure, so right now, you can drive to the deposit all year round, existing roads. You don't need to build roads. They're heavy duty forestry roads, industry roads. They connect to the town of Mackenzie, where existing rail goes to Trail, British Columbia, where Teck has a zinc and lead smelter. The rail line also goes to Prince Rupert, which is a deep sea port, so the Chinese groups and Japanese groups do see that as a way to get the concentrate to their smelters in China and Asia. And then the largest hydropower plant in BC is the WAC Bennett Dam on Wilston Lake to our south. So, you've got existing road, you don't need to build a railroad, you've got power in the area. So again, it's one of these things that's attracting these major mining groups as well. In fact, I was in Tokyo about 3 weeks ago, and from that visit to Tokyo, one of the big Japanese metal groups are planning to visit us in the first week of December. They want to go to site. So again, attracting these major mining groups. So the deposit itself, we've got 112 holes that make up the block model. As mentioned, 71% of the resource is indicated, the balance is inferred. Ultimately, this is an underground mine, so we've done most of the surface work to where a decline would start into the deposit. We've got the underground exploration permits in place, and we're current with the engineering and environmental baseline studies. There is the deposit. The red is the indicated category. The yellow is the inferred category. And as I mentioned, it remains open for expansion along strike and at depth. And basically, it's an ideal underground mining situation. What we have is basically this large rectangular slab of mineralization that dips at 70 degrees. So as you come at it from the side of the hill, you've got this massive wall of mineralization that you just mine. And right now, it's 1.3 kilometers along strike, 800 meters dip, and on average 20 meters wide. So you've got this very predictable, consistent, massive slab of mineralization open for expansion at depth and along strike. So as you do look at, the zinc space itself very quickly, about 4 or 5 of the largest zinc mines in the world have shut down in the last couple of years, taking off almost 15% of the world's zinc supply. And there's very little new zinc coming in to replace that. Nothing major in terms of major deposits being developed. So this structural deficit in supply is in place, and some are forecasting it to last 4 or 5 up to 10 years long. And the price of zinc currently at $1.50, which is almost a decade high, could move up to almost $2. So there's a very bullish scenario for zinc right now. And there's very few zinc companies that are out there. I know there's a few others here today, but as you look at them closely, I think I invite you to look at again the grades, the size of the resource, the jurisdiction. It'll really separate the better projects from the not so good ones. So there's the resource. We're using a 5% zinc cutoff grade, so being pretty conservative using a 5% zinc cutoff, and we're at almost 19 million tons indicated and almost 10 million tons inferred. In the ground, that's almost approaching 5 billion pounds of zinc, almost 1 billion pounds of lead, and about 11 million ounces of silver. So, that's a lot of metal in the ground. Roughly $10 billion Canadian zinc in the ground. This year's drilling is not included in the resource, so we'll be putting out a new resource update probably first quarter of 18. Just going to highlight a couple of the drill holes. So again, this is what has Lundin Mining, Sumitomo, a bunch of big groups calling us. We're looking at 25 meters almost at 15% zinc lead, 15 meters almost 20% zinc lead. Just highlight A17-137 from this year. It was almost 60 meters true width of almost 12% zinc lead. It included almost 16 meters of 22% zinc lead. I mean, it was just a great hole. And that's what, again, separates the better projects from the lesser projects in terms of size and scale to attract larger mining groups. And we'll quickly go through the last few slides, but the opportunity that Jay's outlined, what struck him obviously was the quality of the project, but also our valuation. Right now, this is from the base metal analyst at Echelon in Toronto, and he put this together after one of our last drill results. And basically, you can see at the top there, CZX currently trades at 0.007 cents per pound of zinc in the ground. So that's less than a penny. It's 0.7 cent per pound of zinc in the ground, versus a peer group which averages 2.5 cents per pound of zinc in the ground. So we're trading at 1/3 of the valuation given to our peer group on average. And again, I invite you to look at the projects carefully, and I think you'll see that we're again amongst the higher quality plays. So I do think the opportunity for any new shareholders obviously is getting in before the prices run up, before the stock's been re-rated. And as Jay says again in his piece, just achieving the average of our peer group where they're currently trading would bring our share price up at least 3 times. So I do think there's tremendous upside in share price. Upcoming catalysts. So we've got the rest of the drill results coming out over the balance of this month. We are then going to do we're doing some metallurgical testing. So those results will come out probably towards the end of the year. And then we're going to do an update to the resource category calculation to include this year's drilling. And then we're going to embark on a PEA. So I think there's, again, some very good news flow over the next 5 to 6 months. Some of these are obviously big catalysts, and I do think if things go right, there's going to be a re-rating on the stock. And the thing that we've been missing really is getting out and telling the story. Most people I meet will say, "I've never heard of Canada Zinc Metals. What a great story!" And so the guy I met in Hong Kong 3 weeks ago reached out to Jay directly, unbeknownst to me, to say, "Hey, you should look at this company." So pounding the pavement over the next 6 months is a big part of our objective as well. In summary, so the Cardiac Creek is one of the largest undeveloped zinc-lead deposits in the world. It's attracting investment from large base metal mining groups, including Tongling, Teck, Korea Zinc. And again, they're attracted by the project's scale, the grade, the district exploration potential, and the jurisdiction. We're the dominant landholder in this Kachika Trough. Our neighbors are Teck and Korea Zinc. The claims are all in good standing in 2025. We don't have any annual payments that we need to make. Infrastructure in the area is fairly well established. We're significantly undervalued versus the peer group. And all of this is under this backdrop of this chronic shortage of zinc supply for the next several years. Thanks for your attention. Yeah.